Hello and welcome to the trade setup. In this video, we are looking at Encore Energy. It is time for another update. And on this chart, we've built such a structure that allows us to almost not even care about the rest of the chart because we have an initial 5-wave move to the upside, which is strongly suggesting that after a 3-wave correction into the area of support, we can expect with high probabilities at least another 5-wave move to the upside. So, last week, I've shared this white scenario and this white area of support between $2.43 down to $1.37, levels against which we expect to build a wave 3 to the upside. If we manage to actually build a wave 3, we can expect afterwards a fourth and a fifth to take us to even higher prices eventually, but it is not a given. Only the first 3 waves are the likely portion, but there is no need to focus on that right now. So, the theory suggests that as long as we do not get a sustained break below the 78.6% retracement, we can expect with high probabilities to see a reversal into significantly higher prices. And even though formal invalidation would require a break of the beginning of this movement to the upside, so we would need to get to at least $1. The sustained break below $1.37 would be a quite significant signal that the probabilities have shifted and that rather likely we would see a complete reset, a complete failure of this structure, and yes, break below the beginning of this movement to the upside. This also allows us to identify trade setups with extremely favorable risk-reward ratios. Last week, I have also shared with you this yellow structure, this 3-wave correction we expect to form within this wave 2 in white, and it seems we have only continued in our expectations of building a wave 5 in yellow in this movement, because after all, we have been tracking this as a wave C, and a wave C is always a 5-wave pattern. So, within this structure, I am now looking to continue forming this last wave to the downside in a 5-wave structure itself. Sure, the wave 5 can form an ending diagonal instead of an impulse, which I find quite likely to be the case. But once we have this as a wave C complete, the wave 2 in white could be complete, and we could already start looking for the reversal to significantly higher prices. Sure, even once we would build this as a 5-wave pattern down, we would still need to watch out for levels of resistance. It might even be the case that this would be still the wave 3 extending lower, and extensions are always possible, but I would already typically expect within this structure to get to quite low levels, very close to this last level of support, levels from which we expect to form the reversal. So if we accumulate at $1.50 and it extends down to $1.35, I don't believe we would have missed out on too much. And of course, the order can be split. We can be buying all the way into this last level of support. And as we extend the lower prices, the risk-reward ratio would only improve. Since the previous video, we seem to have also managed to break the previous wave 3 lows we have formed in this area. And my primary expectation remains that we might see a bottom once this 5-wave pattern is complete. But since we cannot identify a clear 5-wave pattern within this as a wave 1, I have to likely assume that the pattern information would instead be an ending diagonal. So in this wave 3 in yellow, I could be looking very easily to build instead something like an A, B, C structure where quite easily the wave A might have already bottomed. There may be other scenarios, but this will be my focus. So again, the wave A might have already bottomed, because if I am to go internally within this structure, the pattern to the downside does seem rather complete as a potential impulse. So next, I would watch for the levels of resistance for a potential wave B to be currently forming, where as long as I stay below the 78.6% retracement at $1.90, there is still plenty of pressure to extend to lower prices within this wave C of this as a larger wave 3. In addition to that, typically the ideal target for a wave 3 is the 138.2% extension of the wave 1. that sits at $1.52. But I will caution you that there is a good chance, especially as we would be building an ending diagonal, that the wave 1 would end up being the longest, that the wave 3 might not actually build such a long wave after all, and the wave 5 in that case would even need to be the shortest wave of this entire movement to the downside. But since I am quite convinced that we would be building an ending diagonal within the wave 5 of this wave C, I would typically expect to form a larger wave 3 in an A, B, C pattern, where we could eventually still get to the ideal target. Ultimately, this is not financial advice. I'm not going to tell you whether to buy, where to buy, or anything like that. I'm simply here to provide the structure that I follow on this chart and the likely path that I expect it to eventually form. And yes, this is the setup I'm looking at. I would primarily still expect lower prices within this wave 2 in white still. Other scenarios could very easily be formed within this overall correction. I'm not claiming this to be the only possible outcome, but this is my preferred path. Now, before we end the video, if you want to work on these setups with me and want to get access to a lot more, send me an email. It will show up on the screen right now. But for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoyed the content and want to support it directly, check out the channel membership, and I'll see you in the next one. Bye bye.